everyone, welcome back to the US CPA classes for financial accounting and reporting. In this particular video, I'll be walking you through in detail about long-term debt. And this is part 1 to cover the long-term debt, and we have part 2 just coming after this. In this video, I'll be covering in detail about notes payable and bonds payable. So let's dive into part 1 of long-term debt, in which we'll be covering notes payable and bonds payable.
So now we are jumping on to the next topic, which is long-term debt. Long-term debt or financial liability. So in this, we'll be understanding 6 things. One is what is long-term debt? What is being classified as a long-term debt? Second is like the accounting treatment of the cost which we incurred to acquire the debt. Third one is if there is any discount or premium, how to deal with it, right? So these are like basic information about like the long-term debt. First, we'll be understanding what is long-term debt, what all things could be considered as a issue cost, and what all things to be considered for the premium or discount, and how to do the accounting of that. So that all we'll be understanding at very first stage. Then after we'll be understanding 5 things in detail. First one is note payable. So note payable is also considered under the long-term debt because this is generally payable for more than 12 months. Second is bond payable, that will be understanding. Third, we'll be understanding the modification and extinguishment of the debt or bond or note, right? Then after we'll be understanding the trouble debt restructuring by the debtor. So if there is any debt in which there is any problem, how to do the restructuring of the same, and upon doing the restructuring, how to do the accounting of the same. And lastly, we'll be discussing in detail about the debt covenant compliance and the requirement of the compliance. For any non-compliance of debt covenant, how it may result into change from the long-term liability to the short-term liability, right? Yesterday also we discussed this concept a bit, right? Do you remember?
Yes,
Ayush, Akash, right? So we'll be doing we'll be putting some more light on the same concept also. So first one is the long-term debt. What is long-term debt? Those liability that are scheduled to be mature beyond 12 months, 1 year, or you can say the operating cycle as the case may be, right? Very simple. What is considered long-term liability? Which is payable after
1 year or
1 year or the operating cycle. Second is the long-term liability are initially recorded at present value. That is also very much important. The long-term liabilities are generally recorded at present value, and present value is being considered normally as the fair value for the long-term liability, right? Third thing is issue cost are included in the cost of bond and are therefore amortized over the life. Issue cost. Do you know what is issue cost of debt or what is issue cost of bond?
So when we are issuing a debt or a bond, most probably all the expenses, legal expenses and all the compliance costs which are to get the thing issued, that is the issue costs which we are talking about.
Yeah. So issue costs may include legal costs, underwriter cost, like listing and security exchange costs, or any such cost which is being directly related to the issue of those respective debenture, which you might have paid to any consultant, lawyer, broker, agent, stock market, underwriter, any such thing. So the issue cost, if you have incurred any issue cost, that also need to be capitalized and amortized over the life of the debentures or life of the debt, life of the bond. Fourth is amortization of discount or premium. Discount or premium. So when you are issuing the bond with the interest rate which is higher than the market rate, so you might be issuing the bond at premium, right?
Yes, sir.
And when you are issuing the bond at lower interest rate than market, then you might be issuing them on discount. right? So first we need to calculate what is the discount and what is the premium, and then that should be reported in the balance sheet as a direct deduction or addition on the face amount of the liability. So if, for example, you have issued $10,000, or you can say $100,000 debenture at 5% interest rate, whereas market interest rate is, let's say, 4%. That means you have issued a debenture at higher interest rate. If you are giving more interest rate than the bank, that means you might have charged premium. So for that, you'll be calculating the premium at which you have issued, and whatever is the premium is need to be added into the liability. And if you have issued on the discount, then that discount also you need to add into the liability, as you need to pay more or less as the case may be for discount or premium. Next is debt issuance cost is reported as interest cost, whether it is a brokerage cost, commission, tender, or you can say legal fees. It all goes into the finance cost, I would say. Instead of interest cost, we can say it's a finance cost. Right? Any doubt so far? What is long-term debt?
No, sir. No, sir. Clear.
So far, so good. Rajiv
Yes,
sir? Rajiv sir, any doubt? Might be busy. Okay, so now we'll be understanding the 5 things. First is not payable, second is bond payable. They both are more or less same, right? Once you understand what is bond payable, what is not payable, then third important thing is modification of the bond, modification of debt, extinguishment of the bond, extinguishment of the debt, right? That is also very important. When there is any change in price or there is change in any term, that may result into the modification of the contract. That is what we have studied in 606. What is a contract modification we studied in 606?
Contract modification is basically when there is any change in the terms of the contract or
change in scope or change in price or both.
Right.
So same applies here also. If there is change in price or if there is change in scope, then that particular contract is being qualified as a
Modification, right?
Modification or extinguishment of the contract. So we'll be understanding that in detail, and then we'll be understanding trouble debt restructuring. Have you heard about debt restructuring?
Yes, sir.
What is debt restructuring?
Sir, basically
type of debt that is within the company, मतलब डिबेंचर है या फिर लॉन्ग टर्म लोन है, सर हमने चेंज करा है जब रेशियो की किस उसमें हमारे पास फंड्स आ रहे हैं, कौन सा इशू करके उसके स्ट्रक्चर में चेंज है, तो
that is finance restructuring or capital restructuring.
हर बार यही होती है.
Sir,
I'm saying what is debt restructuring?
Debt restructuring is basically like if a company has 10% long-term bonds issued, then due to some reason it might change it to 5% debentures or something else. This is primarily debt restructuring. Basically changing the type of debt to something more beneficial to the company.
Okay. Rajiv sir, any thought? Akash, any additional input?
No, sir. Sir,
Yeah. So no worries. We'll be discussing in detail.
Hello.
Debt restructuring. Yes, sir. Can you hear me?
Yeah. Hello.
Yeah. So we were discussing on about debt restructuring. So I thought, like just to check, like if you have any thought or any experience of debt restructuring and would love to share with class.
Yeah, of course. Debt restructuring means the kind of loans which we have taken and we are facing certain kind of difficulties while calculating the interest and all. If we get a better proposition to service that debt with a reduced rate of interest, that is all fine, and we can restructure the costing and the profits. That's the cost of that's a restructuring.
Yeah, that's one of the way of doing a debt restructuring. So
Yes.
it may be on account of change in terms and condition. For example, earlier you had debt for 5 years. Now you have
Yes.
extended that for 20 years, right?
Yeah.
So now currently if you have debt at interest cost of 10%, and like you got a better deal, like sir was saying, like 5% interest, and you have swipe it out, right? Or it may be possible that you are going to be a bankrupt, or maybe your client is going to be a bankrupt, and now bank is ready to do the restructuring so that at least they can recover something. So they have reduced certain amount, or they have relaxed certain interest rate. So that's also comes under the debt restructuring category. So we'll be discussing all those things in detail one by one. And then last one is debt covenant compliance. So hope Ayush, Akash, you remember what is debt covenant?
Yes, sir. So basically, when the bank, it is in case of unsecured loans. The company provides to banks that we would be maintaining a particular amount of current ratio or a particular amount of inventory or all those things. That is called basically covenants. If the company fails to maintain
That particular
ratios, then the company will have to pay the amount
before the expiry.
before the expiry. Correct.
Yeah, so like partially right, partially not. Yeah, so there are certain covenant terms condition which bank impose on the company, that they need to maintain certain ratios like debt to equity ratio, interest coverage ratio, current ratio, liquidity ratio, and so on and so forth, so that their money is like protected, and their interest and EMIs are being protected. Now, coming to the another part of the debt covenant, if you have done non-compliance of the debt covenant, or the company is not in a position to comply with the debt covenant, then what will bank do? Right? So in that case of scenario, there are again various things that bank can do, which is in line with the modification. It may ask, like, it may not provide you the respective, you can say, receivable or inventory, because that may go on a lien, right? Second thing, it may be consider impact on the CIBIL score of your company, so that in future you may get trouble in getting any additional loan, right? Or third thing, it may result into like it may impact your market value and face value as well, right? So we'll be discussing all those things in detail one by one. So here, like I've just given you high level overview, what is long-term debt and what is not payable, what is bond payable, how it is modified, and what all impact do have on modification and extinguishment, and then after what is troubleshooting debt, and then restructuring of debtors, and lastly the debt covenant compliant. So now coming on to the very first part, which is called not payable, right? So like we were discussing earlier also, note payable is similar to long-term liability, which is being paid or payable by the company to the party to whom they have issued the note payable. So what is note payable? Any idea? Any idea what is note payable?
The note payable basically a type of promises that the company may issue, that we will pay you this amount with an agreed amount of interest. That is basically note payable. That's what I understand.
Anyone else would like to attempt?
No, sir.
How can you pay or give to any company if you have a note payable like bigger amount?
Basically sir long term hota hai note payable what I feel. बियॉन्ड 12 मंथ्स ही होता है जनरली और बैंक्स और उसकी तरफ जो आपकी एबिलिटी होती है आप रेंट की तरफ शॉर्ट टर्म होता है मेरे को तो
So you are saying not payables are generally long term,
हाँ मतलब
but why?
इसका मे बी फाइनेंशियल इंस्टीट्यूशंस और इन सब की तरफ इनसे जो हम लोन लेते हैं मे बी दैट्स व्हाई सो मतलब लॉन्ग टर्म वर्किंग कैपिटल नहीं है बेसिकली व्हाट आई मीन फाइनेंसिंग योर यू नो एसेट्स एंड ऑल इसलिए इट शुड बी लॉन्ग टर्म मतलब मेरे को बट क्लियर आइडिया है नहीं प्रॉब्लम मतलब इसका नोट पेबल का भी ऐसा डिस्कस नहीं होता या तो वही होता है शेयर्स होते हैं या फिर डेट होता है किसी बैंक से लिया है नोट पेबल इतना देखा नहीं मैंने मतलब बैलेंस शीट्स में भी
Yes, Rajiv sir, anything you would like to add? So, okay. So more or less, yeah, Ayush, like you're right. Like note payables are generally long term, and that has been issued to do the long term financing generally. Same is the case of bond payable also. That is also generally long term issued for 5 years, 7 year, 10 year, 15 year, 20 year, depend on like the financing requirement. How big is financing requirement and for what particular project the financing requirement is.
But up in the first column, you have mentioned all the short-term ones.
Which?
3.8.1 in the first column, you have mentioned written promissory notes, generally short-term. It includes short-term bank loans, credit line, allow.
Yeah. I'm coming to that. I'm coming to that. I'm coming to that. So two things, like one is like categories of note payable. So note payable are of both categories, short term as well as long term. But bond payables are being generally considered like they both are same, you can say, concept, but generally bonds payable are being used for always be for the long term category, and note payable are generally being used for the short term category, like your promissory note, or maybe like your you can say commercial paper, or maybe like for your trading activity, but it can also be used for the long term. It's not necessarily that not payable can always be used for the short term. It can be used for the long term as well, but most of the time note payables are being used for the short term financing, whereas bond payable are generally being used for the long term financing.
okay
Yeah, so first one, if you see in the note payable, so maybe like we'll go hand in hand about note payable and bond payable. So if you see in the note payable, first is written promissory note. Do you remember like this from your school days? What is promissory note? I promise to pay this much
yes
money
sir.
to this
Yes.
much, and like drawer, drovey kind of things, right? Old days. I don't know, like in today's world, does it exist or not? Because like in nowadays, like all is digital payments method. So I'm not sure like now any promissory note do exist or not in practical experience, but yeah, theoretically it is one of it. But second, which is like generally it include like short terms loans, like we were discussing earlier, like kind of your working capital loans, or maybe your short term needs requirement, or maybe your credit line requirement, maybe like if you have receivable which you have expected to be collected in next 30 to 45 days, and you wanted to purchase something which is like bigger in amount, so you can take the credit line from the bank, and then that allow the company to borrow for an agreed limit without using much formal loan work paper or something like that. Third one is like commercial papers. Commercial paper is also very much similar to, you can say, promissory note, but it is being more used in the trade and commerce. these all are, you can say, like very similar terms which you are already being studying from school and college days. Nothing new. But the key things to keep in mind: note payable are generally being used for the short-term perspective. Yes, you are right, Ayush.
Okay.
Whereas like the bond payable are being generally used for the long-term liabilities.
Hmm.
Bond payable is recorded as a liability when a company issue the bond to generate the cash. Generally, bond payables are long-term, like I said. Things to understand more in detail about the note payable is, or you can say bond payable is, first one is computation of issue price. How do you calculate the issue price? Right. Second important thing is amortization of premium or discount, because in the bond payable there may be possibility you are issuing them at a discount, or there may be possibility that you are issuing them at a premium, because the market value of the company or the founder of the company is also being attached, and that may help in determining the interest rate as well as the premium to be payable or discount to be charged. Right. Last one is the serial bond. What is serial bond? We'll be discussing that also. So these are the three concepts we need to understand. We'll be discussing them in detail. Then after, computation of issue price, amortization of premium or discount, disclosure, and serial bond. So maybe let's go into the notes over here. So bond payable, like we were discussing, computation of the issue price. The first one is computation of issue price. How do we calculate the issue price? When bond is issued, the bond contract specify the amount and the timing of payment the issuer is obliged to pay. What is the bond issue price? The contract price which specify the amount and the timing of the payment the issuer is obliged to pay. So that is called issue price.
Right.
Right? Very simple. Second is the issuer will pay the following. The person who is issuing the bond, he or she need to pay the principal amount at the maturity date along with the interest at the specific intervals. So these two things are being payable from the person who is issuing the bond. And when someone is issuing the bond, he or she will be collecting the cash. Right?
Correct.
He or she will be collecting the
Cash.
cash. Right? Next topic is effective interest rate. What is effective interest rate? Effective interest rate is determined by the marketplace, not by the contract. That means if you have a contract, you have issued a bond at 5% interest rate of $100,000. That 5% is the rate of interest which you need to pay as per the bond agreement. But that is not the market interest rate. Market interest rate is at the prevailing market. That can be like 4%, or it can be 6%, or it can be 5%. Right? So the effective rate of interest is always being considered as market rate of interest. Make sense?
Yes, sir.
Sir, one thing,
Mm-hmm.
effective interest rate and implicit interest rate, are they the same things?
Yeah, more or less.
Okay, okay.
Right. Note over here is, if coupon rate is more than the market rate. What is coupon rate?
Coupon rate is a rate which we decided when we issued the bonds.
Yeah.
Mention
So
on
the
the-
rate which is being mentioned on the bond. If the coupon rate is more than the market rate, that means you have issued 10% and 10% 100,000 bonds which is being payable in 5 years, whereas market interest rate is 8% for the same kind of liability. So you will be issuing the bond at premium or discount,
Premiums are
right? Because you are paying more interest in future, so you can charge the premium now.
correct.
Second is, if coupon rate is the rate on the bond, is less than the market rate. For example, market rate is 10% and you have issued 8% debenture. In that case of scenario, when you are issuing 8% of debenture, it will be at the lower price. Why it is lower price? Because of the discount. Make sense?
Yes, sir.
Yes, sir.
Third is present value of the bond is calculated based on effective interest rate. How do you calculate the present value of the bond? By using effective interest rate. For example, you have issued $100,000 of debenture at 8% interest in financial year 2002 for the period of 5 years. And now the market interest rate is more than the bond interest rate. So in that case of scenario, you might be issuing the bond but at lower price, right? And that lower price will be discount.
Yes, sir.
Right? So in that case of scenario, the discount which you are giving, right, that also need to be amortized over the period of that particular bond.
Bond
Make
duration.
sense?
Yes, sir.
Amortization of premium or discount. How do you amortize the premium or discount? Over the life of the debt or bond. There are two methods. One is interest method and second is straight line method. Generally, interest method is considered as a preferred method. Whatever the interest you are paying and the same proportionate you will be amortizing the premium or discount. Or you can choose the straight line method also. Like for example, if $100,000 bond you have issued at $80,000. So $20,000 discount that you can amortize over the period of 5 years by using $4,000 each year. Second option would be in the proportionate to the interest rate. That means if you are issuing $100,000 bond at $80,000 and let's assume interest rate is 5%. So 5% multiplied by 80,000, that is 4,000 in year 1. Same way year 2, year 3, year 4 and year 5 you will be identifying the interest payable on the reducing balance if you are annually paying certain amount, and if you are paying after 5 years then on the entire amount. In the same proportionate you will be amortizing the discount or premium as well. Make sense? That is called interest method.
Yes,
Any
sir.
doubt how to amortize premium or discount?
No.
No,
But
sir.
Gents are okay?
which one are we actually choosing?
Interest method is preferred method, but you can use straight line method also.
Okay.
Now coming to the disclosure side. What all disclosures are being required for discount and premium? On the balance sheet, issuer of note payable in the first box and receiver of the note receivable on the right hand side. So when you are issuing the debenture or debt at discount, that means your liability would be less than the face value, right? That is liability minus discount, right? So that is the amount you are supposed to payable after a specified period of time. And each year you'll be adding interest payable or discount on issue of debenture in that particular liability. Make sense? Or shall I do an accounting entry for you?
Understood, sir.
नहीं एक बार कर दो सर, थोड़ा क्लियर हो जाएगा, कुछ थ्योरी से तो कंफ्यूजन.
Okay, 1 second. So, for example, here the bond face value, let's say, is $100,000. Market interest rate, let's say 10%. 8% or let's say 12%. And this bond, let's say you have issued at a discount or premium, whatever the case may be. Issue price is equal to this multiplied by this divided by this, right? In this case of scenario, it's 121,000. Right? So far so good. Issued price.
Yes, sir. Yes, sir.
And now this is your discount or premium. So this minus this is your premium. This minus is your discount. Right? Make sense?
यस सर, ये जो आपने सर फॉर्मूला लगाया था इसमें इशू प्राइस के टाइम पे, आपने करा 1 लाख इंटू 10% बाई 8%, तो इसमें वो बॉन्ड की फेस वैल्यू है, फेयर वैल्यू है एफवी से?
फेस वैल्यू, फेस.
तो फेस वैल्यू से हम अगर इशू प्राइस निकालना चाहते हैं, इशू प्राइस, ओके,
If you are saying like market interest rate is 10% and you are giving at 8% interest rate.
करेक्ट.
So you are giving it less. It has to be has to be 80,000. Sorry.
ओके.
Right?
यस सर.
So in the first case, you are giving less interest. That means you are issuing at discount. This 20,000 need to be amortized over the period of 5 years. Let's assume life is 5 years. Right? So there are two ways. One is like the straight line method. Straight line method is this divided by 5. Right? Straight line method. Second is interest method. So every year you are giving interest. This multiplied by
8%.
8%, right? And let's say if there is any installment also, right? So we'll go with this discount one, or shall we do both the examples?
सर एक ही कर लो.
Let's go with this discount one. So here is your interest. This is your interest expense. And this is your repayment. And this is your EMI of amount paid each year, and let's say so in this case of here, let's assume you are paying 25,000 let's say as an EMI. So this so if you are paying, let's say 25,000, EMI each year for a period of 5 years. So your principal is going to be plus this minus this. And somehow it has to match with the 100,000 that you need to take care. This minus this. Right? Are you all with me?
Yes, sir.
Yes, sir.
So this multiply by 0.08. Right? This is going to be your interest. So here we having change.
सर वो ब्रैकेट लगाना होगा
Which bracket?
वो एरर आ रहा था ना आई वाज टॉकिंग अबाउट
So generally, like I think this
हमने
is
इसमें
something. One second, and you can say
नहीं ये
here
लगा
and
माइनस 18,000 माइनस 17,000
here and balance. If
Yes.
I say 600,000 minus,
बढ़ेगा इंटरेस्ट जो भी है मार्केट का 10%.
right? So here you can simply say this,
बस
right? This one,
राइट
this is
वहाँ पे नेगेटिव क्यों आ रही है फिर
कुछ गड़बड़ होती है.
one second.
अगर मैं 83,000 करता हूँ माइनस ये करूंगा तो हाँ अब सही आएगी ना पॉजिटिव
Right?
उसमें गड़बड़
Something like this,
हाँ
right, Rajiv sir? So now this is your interest expense, which is going to be amortized over the period of 5 years, and this is your principal, which is going to be paid year over year, right? Plus 268, just to make sure not 100,000. Right? So this is the way like you'll be doing the calculation of interest payable to be considered over the period of 5 years.
राइट सर
So now coming on to the disclosure part. So disclosure part, discount and premium, how to do the accounting. First in the book of issuer. Issuer means the person who is issuing the debenture. So if you have issued the debenture at discount, so what will be the journal entry? Issue of debenture at discount. So this debenture you have issued for 80,000. So what will be the journal entry? Cash
बैंक अकाउंट डेबिट हो जाएगा 80,000
account debit. How much? 80,000.
और
डिस्काउंट
उसके बाद डिस्काउंट
डेबिट 20,000
Discount debit 20,000.
यस
Two bond issue.
हाँ
To
Bond issue. 1 lakh.
100,000, right? So here liability less than the face value. So we'll be recognizing the liability at less than the face value, which is liability face value minus the discount provided. If you are issuing at the premium, then the liability will be recorded more than the face value, which is calculated by liability adding the premium. In the books of receivable, the person who is receiving the bond, if you have received the bond at discount, that means it's your asset, it's your investment. So investment will come in asset category, right? And that will be recorded as less than the face value because there is another asset which will be considered as the premium paid, or sorry, a discount received on the investment which you have made. So that will go as an asset with the discount received separately. Second is premium. In case of premium, for the issuer, it will be liability which is more than the face value. And in case of receiver, the person who is receiving the premium, that means the person who has paid the premium. So you have paid extra money for your investment. So asset will be more than the face value. That is asset plus premium paid. Make sense? In the balance sheet side.
Yes, sir.
Now coming to income statement side. Income statement side, first look at the issuer. Amortization expense account debit to note payable. So here in this case, so let's say you need to book this 8,000 expenses of interest. What will be the journal entry you will be making? Amortization of expense account debit to note payable, right?
Correct.
How much is it? 8,000.
And
Now you are increasing.
no payable amount.
So you are increasing note payable, right? On the other hand, the person who is receiving it, what will be the journal entry he will be making? Note receivable account debit.
Right. To interest income. To interest or
To interest income. Or you can say finance income. I would say finance.
finance income.
Right? So if you see note receivable account debit to interest income in case of receivable. Premium, note payable to premium, which is gain, and interest expense to note payable in case of the person who is paying more interest than the book. Next topic is serial bond. Any doubt so far on the discount or premium?
No, sir.
Right?
सर
Bond payable.
करते हैं
Say that again.
अगर हम इसी केस में डिस्काउंट था, जैसे अगर प्रीमियम की एंट्री करेंगे
So note payable account debit to premium.
करेक्ट हो जाएगा उसमें रिसीवर की
Second entry, if you see, not payable account debit to premium, and in case of the recipient, finance income expense account debit to note payable.
राइट ठीक है
Another quick topic is serial bond, and then we'll jump onto the 3.8.3. Serial bond. Serial bond are, that means you are purchasing or issuing the bond period over period in a same sequence, which are of same category, right, and the same nature, is generally called serial bond. These bonds are mature in installment over a period. For example, you have issued $1,000 bond quarterly. That means every quarter you'll be receiving $10,000, and in a year you'll be receiving $40,000. Like generally, like have you heard SIP schemes or annuity schemes? Right? There also you give like monthly contribution, and it save the money either into LIC or maybe any other insurance company, right? But have you seen, like, there is you can say what will be the exact word? Yeah. So if you remember, like annuity. So in case of annuity or SIP, you'll be depositing month over month, and at the completion of the period, it will give you a big lump sum amount, right? Same applies, same concept will apply over here for the serial bond. So it's a commercial bond. It has nothing to do with the personal liability of the person expenses of an individual. So in the when you are B into the sole proprietorship, partnership, C corporation, S corporation, so it is mandatory for you to show how much is the serial bond you do have, right? Because with this amount, you get to know like the future commitments of the company, right? So when anyone is being interested in investing in the startup, he or she should be very well aware of all the off balance sheet item, and this is one of the off balance sheet item, right? So here, if you see an example of $100,000 5-year serial bond would mature in $20,000 annuity over the 5-year interval. So today you have given a lump sum money to the bond holders, and there is some lump sum money. For example, in case of the company like Kingfisher Airlines, like Nirav Modi, Gitanjali, right, Vijay Mallya. In such case of scenario, if the people come back to the India and they wish to do the litigation, they wish to continue with the litigation, they have to come up with the cash in hand, right? So that they can give certain deposit in advance to to fight the respective cases. So here also, if you see this $100,000 5-year serial bond would be mature in 20,000 annuity over the 5-year interval. That means you have deposited $100,000 now, and every year you are receiving interest plus $20,000, which is like part of your annuity. So that kind of bonds are being called serial bond, or it can be otherwise also. That means you are depositing, or you can say you are issuing the bond, $20,000 bond each year, and the maturity would be the 5-year. That means after the 5-year, you will be repaying the entire bond which you have received over the period of 5 years. So it can be either full lump sum amount now and will be payable in the 5 equal installment, or it can be 5 equal installment and payable on the end of the 5th year. It can be both ways. So serial bond can be a series of separate bond issued issues that mature at a different dates. For example, $10,000 bond mature $20,000 each 180 days from the issue days, right? So $20,000 360 days from the issue day, so on and so forth. So it can be possible that it can be quarterly, semi-annually, annually, or with a specified date, right? Any doubt what is serial bond?
Sir.
Are you guys with me?
Yes, sir. Yes, sir.
Rajiv sir?
Sir is not with us.
बट सर मेरे को ये समझ नहीं आया ये जो
I'm there.
सर जो
Yeah,
नॉर्मल
Ayush.
और सीरियल बॉन्ड्स थी इसमें सर डिफरेंस तो कुछ हुआ नहीं मतलब ज्यादा क्या डिफरेंस है मतलब ये भी तो मैच्योर ही हो रही है वो बस एंड पे होती है
No, yeah, you are right.
कर लिया
Two things here, like look at from the company point of view, so for example, you got a funder, right? He is ready to give you the funds, and he wants, let's say, 5-year convertible bonds,
okay
right? He is not interested in giving you entire 100,000 in one go, and you are also not required entire 100,000 in very first year. So there may be an arrangement that he or she will be giving you $20,000 each year, which is being required for your financing requirement. And it depends on matter to matter. It depends on case to case.
बेसिकली आपने जो बॉन्ड, मैं सपोज इशूअर हूँ, तो मैंने अगर 100,000 की बॉन्ड इशू करी, ठीक है, तो जो इन्वेस्टर होगा वो मेरे को ऐसा नहीं कर रहा कि पूरा एक साथ दे रहा है $1,000, $100,000, इनफैक्ट उसकी जगह वो $20,000 करके मेरे को ओवर अ पीरियड ऑफ 5 years कर रहा है। तो मैं एज एन इशूअर भी अपनी बुक्स में लायबिलिटी रिकॉर्ड करता रहूंगा over
5 years, but you will be showing this into the notes to account. Or second way, other way around is that they have given you $100,000, which is being repayable in the 5-year equal installment.
Okay.
दोनों तरीके से हो सकता है,
Both ways, right?
Okay.
Each series can be accounted for as a separate bond or on a group basis on the characteristics of the bond. If series of the bonds are similar character, then it can be grouped together. Premium or discount should be amortized using the interest method or straight line method like we were discussing earlier. So if you see, right, so far we have covered the first 2 points here. Note payable and bond payable. Right? Any doubt so far on these two? Okay. Shall we take 10-minute break or you want to continue?
10-minute break.
I am thinking like you guys are feeling drowsy. Right. So maybe it's 5:15. We can come back at 5:30.
Correct.
Yes, sir.
Just quick 15-minute break.
Yes, sir.
Okay.
Yes.